Welcome to our studios.
Good morning.
You're the head of World Gold Council. You're the managing director, actually. And
Yes.
You recently, last week, published the fourth quarter report, which is also the 2011 whole summary,
Yes.
right?
Yes.
It's a trends report.
Yes.
What's interesting about this report? What are the main highlights?
Absolutely. We call it the Gold Demand Trends Report, and we look at the relative balance of supply and demand around the world. Highlights are that gold demand in tonnage terms was over 4,000 tons, a very strong year again. But very importantly, a new record in terms of total value of that supply. Of demand to over $200 billion, $205 billion in fact. One of the other key trends is really a continued move to emerging markets from developed markets who used to lead demand. And we now see India and China accounting for just under 50% of total demand. And that's really driven by a sustained growth economies in emerging markets in India and China, and a continued robust demand in investment around the world and jewelry. So all of the sectors are up overall.
So China and India you talked about, are they the main drivers for the global demand and supply? What else can you count?
They are. So India is the largest country for demand in the world, over 930 tons last year. Even in the face of rising gold prices, there is robust demand. China is a very big growth story, and I think what people are finding is that demand in China is being fueled by this creation of a vast middle class. So there's a lot of wealth there, combined with a strong cultural resilience and an affinity towards gold. People are viewing it as not only jewelry, but a source of investment allocation. And I think that's really fueled, particularly in India and China, even though it's jewelry, people are aware that inflation pressures are hitting those economies, and they're worried about the continued value of their currency going forward, so they're holding gold as an inflationary hedge as well.
So this is the East, China and India.
Yeah.
You know, it seems like there's a split between the East and West. East being more concentrated on the growth story, where West is about all managing risk.
Yeah.
How do you take that? How can you explain? What is this about?
Well, we can't forget that we're not that far away from the ravages of the markets in 2008, where most asset classes had vastly negative returns. Western investors lost a lot of their net wealth. And they realized that gold is a very good tail risk instrument in a portfolio. And in times of market crisis, it's great to have a little gold in your portfolio, because in times of crisis, it tends to go up in value. We call that tail risk hedging. So people in the West are much more concerned about wealth preservation over time than they are particularly absolute return or maximizing return over time.
How about the new young population entering into the market? I mean, gold is an investment which is thousands and thousands of years old. How come it's now attracting the young population too?
Well, I think it's become accessible. Before the creation of the gold ETFs in 2004, if you wanted to buy gold, you literally needed to go to a gold shop and buy bars or coins, or to a jeweler, etc. That made it very difficult to actually get the gold. So if I wanted to do a large allocation, I needed to worry about, how do I store it? Where do I store it? How do I transport it? It's a physical asset. With the ETFs, it's become at the press of a button, listed on the stock exchanges, we know. It's accessible like the vast majority of other asset classes. So I think the ease of access was the real key. Once it was accessible, people looked at it and said, does this have a role in my portfolio? And we see the answer is yes for many investors.
Let's talk about another buyer, another market participant in the market, in the gold market. The central bankers, the central banks, they stop selling. Instead, they're buying more and more gold. What are they thinking of doing? What is their intention of doing this?
Well, I think they are really coming back to the fact and realizing, like they used to do, that gold does have a role in reserve asset management portfolios. So we can't forget, in this vast amount of liquidity coming around the world, some would call it the quantitative easing wars, if you will, currency wars. Currencies are depreciating around the world. people are worried about that liquidity coming back. Central banks, in particular, who used to hold vast amounts of reserves in dollars, are actually turning to gold now because they're worried about the future of the U.S. dollar, and they're diversifying away from that. In some sense, that's also taking place around concerns, particularly about the euro as well. So gold is reestablishing its role as a currency for central banks.
Yes. Okay, last question, and we have only 10 seconds. The price of gold has risen steadily, and it's still rising. And the sustainability, is this going to be there? What is the outlook for 2012?
Sure. If we look at the relative balance of supply and demand, it does look positive for the outlook for the gold price going forward. We don't make price predictions, but we do say it is robust and supportive of an increasing price from here.
Perfect. Thank you so much for coming, Mr.
pleasure.
Jason Toussaint.